I can.
Yeah, Tim is sharing it right now.
Oh, okay. I'm trying to get back to the phone.
So I'm on your gold chart.
Okay, all right, let's see. Tim Hessel, Swedish presenting. Okay. All right, so obviously this week the story was, is, the Middle East, the nervousness, whatever you want to call it. So there's gold, and, that's a month, so pretty obvious. Now, if we go down, look at the next chart is Bitcoin, I believe. Okay, so it had a dip where gold didn't, but we can see that that's, elevating, still needs to take out its high, but there's a clear correlation. So why is it that gold is outperforming? Well, you'll see the punchlines at the end. It's also I guess in my opinion, the money thing where I'm telling you, I've told people what's going to happen before it happened, and I'm going to say it again, like at the end. But all right, if you can go down one, Tim. Now that is, let's see. Oh no, actually the top one was. Can you go back to the top one? I can't. I'm trying to read the time horizon on that. December. Oh, that's okay. So that's 1 month. Sorry, my eyes are bad. Okay, if you can move down to the third slide, I guess. And can you tell me the time horizon on that? It's 3 months, right?
Yeah, October until early December, it looks like.
Okay, so note that's in the past. Now go down one, so we can see that gold was flat and then fell. Now, right there, same time period, what happened to Bitcoin? Well, it got a pop, but was relatively flat and then slid towards the end into December. And we saw that the first two slides from December, so those are moving in tandem, so those have a high correlation over the past 2 months. Then we see them rallying together, and we see gold making new 6-year highs. So that leads me to believe that Bitcoin will continue to make highs, but that's easy to say. Bitcoin's going higher because gold. Well, why? All right, go down one, and that should be. Is that 1 year? I can't read the bottom numbers.
It is 1 year out.
Okay, so we can see that, gold has obviously underperformed Bitcoin over the past 3 years, but we can see that this clear trend that money's been moving into gold. Next slide, I guess. And oddly enough, where else is money moving? To the S&P 500. Less in the past month, as we see, or last quarter, but where did those flows go? Well, they were, part of it obviously moved to gold, and part of it's moving to Bitcoin. So your high correlation over the past year was surprisingly equities and gold. Now that is okay. I think it must have gotten cut off, but long story short, gold did a 6.5-year high. It hasn't traded this high since April of 2013. So that's one key story. Now, next slide.
So, Steve, you want to stop there and just talk about why?
Here's the why part. So we want, Jeremy, you wanted to know tomorrow's newspaper today. So this is what I talked about last year as it was happening. That was Eurodollar's i.e. the inverse of LIBOR, in the first half of last year. So next slide, let's look at Bitcoin, if I'm not mistaken.
So Steve, so sorry. What I was actually saying was gold specifically. So just so everybody's on the same page, like, can you give the fundamental reason as to the psychology behind why people move into gold, just so anybody who's listening can understand how the intricacies of this all work together?
Well, I'll step back and say that people are moving into gold futures. I don't know how much. I'm a believer that people with large sums of investable capital often want the exposure. I don't know if somebody's going to the Federal Reserve and trying to buy $1 billion of gold, but I guess in times of turmoil or political possible unrest anywhere, the trade has, for as long as I can remember, has been the safe trade is buy the yen, buy gold, or buy fixed income. Well, since fixed income in many countries is no longer income, but it's fixed loss, that's become less appealing, and the yen's become less appealing. So you're left with gold, and I guess there's a bunch of slides, but gold is the leader. I mean, is silver going up a little? Yes, but not nearly as much. Now, here, I'm trying to see. So there's the yuan versus the pound. This is important. And the first half of last year, so relatively flat, started moving up late. Now, moving on to the next one. And there you go. There's your Bitcoin. And there was your line in the sand where you had a regime shift from interest rates leading, since we're talking about blockchain, since interest rates were leading Bitcoin, that stopped when Litecoin topped, and the new regime was following the yuan versus pound. That's why I drew that line literally in the sand. And you guys can all see this. I'll email it or put it on the shared drive. And moving on, so what's the point of all this, Steve? We can look at these charts. That is Bitcoin in, let's see. Tim, can you tell me the
Bitcoin Cash in Bitcoin terms?
Oh, okay. Now, what is the driver of Bitcoin? Well, last year there were two drivers. It was interest rates, one, but then, as we remember, Litecoin moving from 30 to 175 in the first half caught people's attention. And in order to buy Litecoin, what does one need to buy? They oftentimes buy Bitcoin. I mean, Bitcoin is the most active and liquid spread to move from that pair to the other. So in the end, as Litecoin went parabolic, people had to buy Bitcoin to buy Litecoin. And on the flip side, when Litecoin sold off, what happened? Bitcoin, when I saw that spread start moving, then that was indicative of the top. Now, how can we confirm that this was a bottom in Bitcoin? Well, it's once again, you need multiple mega caps to confirm the bottom and to start rallying, because that is the second driver in the Bitcoin thing. Besides whatever institutional or being the most well-known, you have to get other people involved for a sustained rally. So there's Bitcoin Cash. That's pretty much a bottom to me, where you can see the huge divot, and now that it's close to overtaking its 1 month high, let's confirm that. One is an accident. Anybody can be lucky on one. Let's move to the next one to see if we can confirm that with. And there is Dash, where it's obviously not I think part of the slide is cut off, but it's actually overtaken its high. It's hard to see that right now, but Dash is one of the stronger ones. Dash and Bitcoin Cash. Moving up next, I think, is Ethereum Classic. That one, there's your bottom there, and I think we recorded that I don't know, a month or two ago when we first noticed it. So if we could go back on the record, this isn't Steve saying after the fact. That was Steve saying before the fact. Next will be Ethereum and Litecoin. I think that anyone with, or most with a technical analysis background would say those are more of a bottoming formation. Next up is Ethereum. It's probably the worst looking. Or what? Go up one. Or sorry, down one. After Litecoin. Okay, maybe I didn't show Ethereum, but now here's silver, just as a comparison to gold. You can see that it's risen, but not at the same angle as gold, and it's also nowhere near a 6-year high. So gold is still dragging the metals complex, and for when gold really gets going, when gold went to 1900, that's because silver slingshotted from 20 to 50. So when you get two people going the same way, it moves the cart a lot faster. And if my bottom is confirmed, which I believe it is, by 4 of the majors, Ethereum, Litecoin, Dash, and Bitcoin Cash, then it's a buy on dips, and it's a buy the large cap alts on dips. It'll trickle down to the small cap and medium cap down the road, but and it'll take time for Joe Blow to not realize that he doesn't want to move into Bitcoin anymore. He wants to go the other way, but that's advantageous to us because we're seeing it before it's happening. So you wanted to know the regime shift. You want to watch the large cap spreads. You want those to start increasing. The dollar value doesn't matter because if Bitcoin goes down, the dollar value of Ethereum and Litecoin will decrease. But the confirmation of the bottom is those 4 spreads increasing in Bitcoin terms. So your new regime shift is watch the alts in Bitcoin terms, and that's it. I think that's the last. Is that the last slide?
Looks like some VIX.
Oh, yes, that's actually the one that, yeah, these slides did get cut off, so we might have to look at these again. But as the S&P rallied in December, the VIX didn't. It had a line in the sand at about 12.4, and when you have equities rising and the VIX not going down, that's always been a huge indicator that something is happening. What that something is, I didn't know that that the U.S. was going to attack Iran, but in any event, that is a major thing to watch when you have equities rising and the VIX no longer going down. Obviously, it can't go to 0 because there's always some implied volatility, but that was a telltale sign towards the end of the year that some regime was shifting, and it is. So watch Litecoin, Bitcoin Cash, Cardano, Lumens, EOS. Those need to start up. Those are all appreciating versus Bitcoin confirms the bottom. And even if Bitcoin goes down in dollar terms, but those are appreciating, when people get into those, they're going to buy Bitcoin, and the proverbial cart will end up pulling the horse. So I think that's it for me.
Well, I mean, if you looked at the market today, it would look and seem like some of the top assets that kind of were very tightly coupled in the past in terms of price are once again coupled. So if you look at Litecoin, Ethereum, Bitcoin, some of those, right, they're all moving in the same direction together, very similarly from a percentage standpoint as well, compared to some of the others. So that regime is vastly different than what we've seen in quite a while. That used to happen in 2017, a lot more so than even in 2018, 2019. There was a lot of decoupling, so it's pretty interesting to see. And it'd be interesting to have some of our data science team kind of do some correlation studies there, just to see, what's unfolding.
I agree, and I think that when one pulls up, the mighty Binance or something, and you click your favorites tab, if you add LTC, BTC, DASH, BTC, BCH, BTC, and you see those spreads up over, a week or a month or whatever, then that's confirming the bottom. And Bitcoin may go down, and they may go down in dollar value because it's 68% still, and carries the mega weight. But as long as market share is moving from Bitcoin to others, then that's your driver. And that's it for me.
Very cool.
Thanks, Steve.
Who else is on the call? I can't see the rest of the list. I'd love to hear from other folks.
Yeah, just a quick one from me. With the Iranian tensions from emanating on January 2nd, after the U.S. markets closed, during that time, the S&P was at 3258, which is about exactly where it's trading now. So despite a little dipsy-do, it's basically where it was. Crude oil was at 61. And when I looked before the call, it was at 60. So actually down a little bit. That's telling you that on a macro front, this whole thing basically is played out and is not any kind of a big deal. Gold was at 1535, but is now trading at 1560. So it's moved up a little bit. And the real winner, and something that I think it's not a macro event, but if you're in a place where there are currency controls or any sort of like location specific turmoil, Bitcoin has gone from 7,000 to 8,100 over this time. So it's definitely acted as a safe haven asset in this particular episode. So interesting to see there.
Yeah, I mean, just to echo what Tim
Very
said,
cool.
it's Dennis. You're looking at traditionally there's a couple of things to buy when these types of situations arise. One would always be defense contractors, but I don't think so many people are going to be rushing into Boeing stock at the moment. And then you get the pure kind of defensive plays, which, as Steve said, look, it's always going to be, at the moment it's going to be gold. But increasingly, you've seen that safe haven status somewhat applied to Bitcoin. Despite the speculative nature of it, that the market seems to have that perspective. They're trading, if not in tandem, very closely correlated.
Yep, totally agree. Tim Bogert, what do you think?
Well, I mean, it's obvious when we go through these macro events that we're going to see a rush into those safe havens. I mean, the fact that Bitcoin is one of them now just means to me that we're seeing the institutional players adopt an attitude of positivity, at least, or involvement towards the cryptocurrency marketplace, specifically Bitcoin and perhaps Ethereum and some of the other top tier coins. To me, that's no surprise. I don't think that we're going to see a further large dip in the top tier of cryptocurrencies. I think we've pretty much seen that run out. We might see a little bit of a dip here and there, but I think that we're going to see a consistent, albeit slow rise as we go up to the halving. And then the big question is whether or not that halving has already been baked into the numbers we're looking at now, or whether we're going to see the incremental increase in price because of that when the time comes. My personal opinion is that we will see it rise to somewhere between 15,000 and 20,000 at some time after the halving, but that's, pure speculation, obviously. As far as what's going on in the Middle East and the world's reactions to it, I think that will settle down, as I think somebody else just said in this conversation. But I think that we're already baked in price-wise with what just occurred, and I think everybody in the world's looking for a bit of calm after the storm. So as long as that prevails, we're just going to be where we are for the time being until the halving.
We have Matt or Samson on the phone. No. Okay. Yeah. Well.
Yeah, I'm on the phone. I'm just on mute. I'm sorry about that.
Oh, cool. No worries.
Yeah, I'm calling.
What are you seeing out there?
From,
I mean, you're all over the place. I see you on LinkedIn and making some very interesting posts. I know you're traveling as well. So, I mean, you have a pretty good world view of what's going on right now. I'd love to hear your perspective.
Yeah, it just echoes the phone call. I think that the institutional folks are recognizing, or the retail folks are pushing that Bitcoin is a safe haven, and so the institutional folks are picking up on that narrative. So we saw the price go up a little bit over the last few days. As it pertains to the Middle East, I asked a question. I forget who answered what the price of Bitcoin was in Iran. I think it was 4 to 5 times OTC. And so I think that we'll still see demand coming out of that part of the world. And there's some interesting conversations about as things, whether they escalate or de-escalate, what role China's plays in just the financing of things. And so that's just going to be interesting because China is such a large market and such a big player. So I have to really give us some more thought and have some more conversations around Capitol Hill about what's going to be happening from a global perspective, or rather from a military perspective, that will continue to impact the U.S. Because we're only on the 8th day of January. We still have like 360 odd days to go.
I think another one of the things that's going to come into play as we go later on into the year is China's favorable stance on cryptocurrencies, and what I believe, at least that I've read, is their intention to go to a cashless system and in part be using cryptocurrencies as a method by which to do that. And I think we're going to, if they go ahead with that program, we're going to see countries on a larger scale going in that direction, and that's going to have a huge impact on the market as a whole.
Yeah, Tim, just to echo that, we were having conversations about the digital yuan. And so for the life of me, I can't understand if you encrypt your digital currency, or if you just say you have a digital currency, how that actually increases the value of the currency from the Chinese perspective. I get from a surveillance monitoring perspective how that really appeals to them because they'll just be able to better track who's spending what and where. So I get that sense. And I think that as nation states convert their physical fiat into digital fiat, that you'll see a stronger push into privacy coins and Bitcoin, just because a state-backed digital currency doesn't actually. I'm struggling to see the difference between that and just traditional paper currency. And there's a great video. I'll send it to the team from the folks in Sweden and their initiative to push out the e-krona, as well as be a cashless society by 2023. And so the Swedes have really just silently outmaneuvered everyone else. I think only 2% of their transactions are actually done in cash. So that'll be actually interesting to see how they proceed, because there'll be a race between nation-backed fiat currencies that are digital and cryptocurrencies. And the last thing I wanted to add to this is, I forgot it. It's gone. I just remembered it. I was having a conversation or listening into Caitlin Long from Wyoming Blockchain Association. And so we're talking about stable coins, and it really clicked for me for the first time because a stable coin has instantaneous settlement. And so that actually kills fractional reserve banking. I don't know if I've said this before, but I think and this is where the conversations around nation states issuing digital currencies, if they're stable currencies, if they're stable coins, if they're asset backed, if they're on a quote unquote dollar for dollar, then that means for every dollar out in circulation, you have instantaneous settlement, in which case you sort of kill fractional reserve banking, versus if you digitize your ability to print new money. I don't see how that adds value to a given nation's digital currency, but I see where other people will see more value in not only privacy coins, but also stable coins that are backed by something they believe in, some kind of physical asset they like.
Gotcha. I'm curious about something, and it's something that's not brought up often in these conversations, but what is your opinion on XRP and the recent investment of $200 million? I guess that gave them the $10 billion valuation, and their efforts to use their protocol for, multinational settlement for transfers and things of that nature. Do you have an opinion?
I have some strong opinions about XRP. I typically just call it secondhand toilet paper. You can use it, but so my whole premise with XRP is if XRP wants to be Western Union 2.0, if you're not part of their group, part of their consortium, if you're not a bank or a financial institution, you can't be part of their settlement process, in which case XRP, I think that the California case will eventually come out of court and find that it was an unregistered security, it's working as an investment scheme, because even as of like this week, I forget the gentleman from Ripple, he's like, oh, XRP is a decentralized coin, we have nothing to do with the price. And so there's a moment where Ripple can walk away 100% from XRP because the institutions who are part of the Ripple consortium, they don't need XRP to execute trades. So if you go back, XRP was created as let's issue some XRP out of thin air. Let's give it to these retail, quote unquote, these retail participants, because they're not investors, these retail participants. They raise a bunch of money for Ripple, the company, which brings us back to I think they're on their B round where they raised $200 million.
Right.
And so this $200 million is specifically for marketing and advertising. It's for customer acquisition. And so when you look at who Ripple's customers are, Ripple's customers aren't retail customers. They're banks and financial institutions. So if you're a typical XRP holder, why are you holding it? Because you're in no way benefiting from this B round, this cash infusion that builds Ripple's empire, because Ripple is still a privately held company.
Right. Okay. I just wanted to get that at least conversation out there, being that it is the third largest by market cap.
I think there's going to be a lot of really disappointed XRP holders when Ripple just disassociates themselves completely from XRP. They will thank people for helping Ripple become a company, become a thing, to help set up a remittance business, a global remittance business, for helping them acquire Western Union. But XRP holders, they have no voting rights, they have no equity, they have no say in Ripple's future. And Ripple is very intentional in saying, XRP has nothing to do with us. We don't control the price. And by saying that, they're going to have that strategic split where they don't care what happens to Ripple. I'm sorry, they don't care what happens. Ripple Corporation does not care what happens to XRP because they've extracted the value from the XRP holders that they wanted.
Gotcha. All right.
Hey, Samson, can I add something?
Yeah,
Hello?
shoot.
I think you hit the nail on the head where Bitcoin is decentralized, like gold is decentralized. Like, it's something you mine, it's something that has a value because there's a market for it. Like it's worth $8,200 because someone's willing to pay that. And what people don't get is most blockchains in companies or organizations, Ripple, and many others that have gone that route, all it is the blockchain is just a funding mechanism. It's the third way of funding an organization. One is equity, two is debt, three is blockchain. And like you said, you own an XRP coin. What do you own? You don't own part of the company. You have no ownership. You know, if their company, it goes up because there's a belief that you do. But yes, I agree with you that there'll be some unhappy campers down the road when the business, whatever business it is, maybe it's not Ripple, maybe it's, you know, a small cap that's $5 million, and somebody's like, oh well, I like your project, I like your, you know, Masternode hosting app, I'm gonna buy that for $5 million, and all of a sudden people buy the coin, and that, you know, owner or developer sells the coin. It's like, oh, that was a scam. It's like, no, it wasn't. What did you do? You helped fund their business. So it's on the investor's own honest to know when to say when. And, you know, with something like Ethereum, as I've learned from you guys, it's a smart contract. It's used for something. Like there's a value in using that versus other ways of contracts. And in Bitcoin or Litecoin, there's a value because someone is willing to pay that. And in these organizations that are using it for funding, that's what most people don't get. It's like they're not using Ripple. The average person who owns $100 or $500 of Ripple, they're just holding it because it's going up or because it's going down or whatever. But I agree with you 100%, Samson.
The other thing I just add to this is, I don't know if you guys are looking at this. I'm on this. So just using David Stern as an example, the commissioner of the NBA. So when he took over the NBA in 1984, was a almost bankrupt league. And since then, he's built it into this global behemoth. And so part of our thought process I've been thinking about over the winter break is how that I've been thinking that decentralized teams lose in the blockchain space, because much like we get on this phone call, we're organizing ourselves for Coin Genius's purpose. You know, Jeremy has a vision, we have a mission, and so when you're dealing with decentralized coins, you don't have that distinct vision and mission, and therefore it's harder to drive not only adoption of your protocol, but also adoption of your coin or as your cryptocurrency as a thing. So do you guys, has there been a look at the industry as a whole to say, hey, let's rank the leadership teams of these different protocols to see who has that back office that puts together championship teams?
Yeah, that's an excellent point. Just like you would do with any stock, you're going to take a look at what their moat is, what prevents them from being overtaken by someone else. You're going to take a look at the management team, figure out whether they got a bunch of mercenaries in there that are bleeding them dry or whether they actually believe in the product. You have to understand what that product is, and then you have to buy it at a good price, right? So in order to really quantify any of the cryptocurrencies out there, one of the main parts that you have to do in your research is take a look at who's behind it. I mean, do they have a history of bringing successful companies to market or successful blockchain programs to market? Are they, part of a scam network? I mean, these are things that are identifiable. There's public records on a lot of people, and especially a lot of the scams that have gone on in the past, but also on the teams that have done something in the market before and have done it well. So it's an excellent point. It's an excellent research point for us and something we can surface.
Sam, I would go even further than that and say, hi, everyone. I would go even further than that and say, piggybacking on the JV that we have for this year, we're creating essentially a VC pipeline, not only to understand, the type of financial instruments so that investors or speculators can, have a better understanding of the nuts and bolts of these projects, but also to identify longevity indicators, use cases, partnerships, investments, project milestones, deliverables, monetization goals, and create a Google claiming type platform for them to communicate those updates with us. And to Steve's point, the small cap projects, they really need a voice in this industry and being able to communicate their progress. And a lot of them are super technical, but not marketing driven. And so they just don't have a good way to even communicate their progress. And I think that's a really big deal in quantifying these projects even before they get on an exchange.
I would agree. Very cool. Is Matt on the call or no?
No, Matt can't make it today.
Got it. Interesting. So I'm going to make just a few statements. One is in line with something that I said, I think, in the last Genius call that we had, which is if I was going to manipulate the market, or if I was, the 1% that has most of the power, most of the buying power, what would I do? I would, pump the price prior to the halving, and right before the halving, when everybody thought that, things were going to moon, in quotes, I would just tank the price, crush everybody's hopes and dreams, and just take the wind out of everybody's sails. And then after that, then I'd rise the price and let Bitcoin do what it does. That's what I would do if I was just putting my hat on in terms of how I can make the most money. If I was
so how do we look for artificial pressure, Jeremy? I mean, do you look at the parabolic lows? How do you find artificial pressure?
I mean, there's a lot of ways. I mean, you look at order books. I mean, you can look. I mean, this is why we have a partnership with a company like Bionic Trader, where you can actually visualize what people are doing. Obviously, sentiment is a huge thing because there's certain Twitter profiles that you come to realize that if you just basically do the opposite of what they say, it's pretty well on point because they're trying to manipulate the psyche of individuals that are investing in cryptocurrencies. So there's a lot of interesting things that we can do.
So to the team, so I'm just going to jump in really quick. Sorry to interrupt you, Jeremy. So to the team, what I'd like you guys to think about is from a calculus, mathematical, metric-driven level, is what can we do to program alerts to signify artificial pressure, not the true yin and yang of a coin, but to Jeremy's point, these really good coins, the powers that be, are most likely going to give artificial pressure to squeeze them, especially as we get closer and closer to a recession. So I would really like to think mathematically how we quantify that to be able to give those indicators.
Well, Christina, I put in writing in the share drive for you, but I don't have the mathematical or computer knowledge to. Well, I figured.
I read it. I know you did.
I mean, I'll tell you, there's a few examples where if I see on a market where it's a wide market, but all the trades are in the middle and they're constantly trading nearer the low than the high, then I know that that's artificial. Where if the market on, Bitcoin is 81.50, 81.75, but there's constantly flash trades right above the bid.
But it goes right to 66 over December. Yeah, that looks artificial to me. I'm just kidding. Sorry, go ahead.
A large seller comes in and they sell. A large buyer comes in and they buy. It's not a constant volume over the whole day where you look at the fake volume or, artificial sell or buy pressure. All it is flash trades, but it's constant. It's like, oh, wow, 100 Bitcoins traded this hour, 100 Bitcoins traded the next hour, 100 traded the next. Things don't happen like that. That's fake. What's more realistic would be if one traded this hour, one traded next hour. Oh, you know, we went to war with Iran, 50,000 trade and the price went up or down. Then volatility increased and you saw, yeah, that's cool, man. Thank you, man. Hold on one second. I'm just getting out of Uber. Oh, okay. Thank you. So that's the key metric. Where a constant volume is fake. You know, it just doesn't. It's the easiest thing to spot, and I guess that's the easiest thing to quantify versus, well, what's a flash trade? There's really no, you can't tell. I mean, if it's a pre-planned trade, I mean, I get those. Those happen quite a bit in equities or options. It's like, you know, you shop a large order and there's 10, you know, funds that are going to sell, you know, 500,000 Apple calls before earnings. That's not something you can just take to the floor and the floor is going to fill you. So you see, you know, it's flat, there's no volume. Just like in gold, there's a lot that trades at 7:30 to 8 o'clock. Then it trades from 8:30 to 9. And from 9 to about 12, the volumes are generally much lower because people get in on the open, in on the close. Like, there's reasons for that, where when I look at the volumes on CMC in each hour, it's like, oh, wow, you know, Bitcoin increased $1 billion in volume this hour, $1 billion. That's not real. What's more real is, oh, the non-farm payrolls came out and all of a sudden $10 billion traded, then that makes sense. But if CoinGenius, which I believe they can measure, can look at exchanges, break down the volume simply by hour, that alone filters what's fake and what's not. Where the Bitwise report simply says, oh, these kind of good exchanges, these, and they name three, they say these three are questionable, but they don't really give much of a reason why. They say, oh, well, their volumes were this and that. They don't go into a lot of depth on that, where I think showing and just simply telling people, hey, it's not, the probability of Bitcoin trading $1 billion in volume on Binance each hour is highly unlikely. You know, so that's my 2 cents.
Yeah. So, Christina, in answer to your question, I mean, there's a few primary indicators that are like the go-to thing that I would look at in the perfect world. If we had the machine learning models specifically around these, then I think we could crack the code in terms of when there's some large market movement about to happen, right? Because obviously you want to get ahead of the game. Number one, it's going to be order book data, right? So see what's happening in the order book, the actual trades that are going through. The volume, not so much, because you can't trust the volume, in my opinion, but that could be a good indicator to let us know that there's a spike in volume, maybe over a certain percentage threshold. The second thing would be unverified blockchain transactions. That's really important because a lot of the money is moving via OTC desks, which you're not going to see in the order book. So the only way to see what's actually happening before it happens is unverified or unconfirmed transactions. Now there's a small window to be able to capitalize on that, and as we saw in late 2017, early 2018, the actual time at which it took to actually settle a trade for Bitcoin, I think got up to like 38 minutes at some point. Don't quote me on that. But with that said, that provides a lot of people 38 minutes of time to actually make a move if they see something happen. Right? So those are 2 things. The last one would be whale alert. That's the API that I think we're bringing in, where it allows you to see movement from wallet to wallet, as we saw when there was some movement of $415 million of Bitcoin from one wallet to another. That really signaled that something big was about to happen, and sure enough, another 415, another 420 million, 410 million moved thereafter, and it was somebody that was moving over $1 billion in Bitcoin, and in fact, very much impacted the market as it relates to the Bitcoin price. So those are the top 3 things that I look at, and then you can expand and kind of get some ancillary, data points, like sentiment, news data, different things like that, that can help us really expand upon that notion a little bit further to anticipate where it could be going, not only over the next hour, but over the next couple of days.
I agree, and sorry I'm a little bit sick, but I also think one thing is if you know on a macro level, if like CoinGenius decides, hey, over the last 4 months we're in a bull market and or we're in a bear market, I think once you know that, then you can use open interest as a metric to also measure fake volume. So in a bull market, if open interest goes up, traditionally speaking, your price would go up because in a bull market, more orders means, more people will be, pushing the price up essentially. So in a bull market, if open interest goes down and you see price going up, that's also an indicator to me anyways of fake price movement or manipulated price movement.
Hey guys, this is Jeremy Sipto, and I've been listening in, and I would speculate, not speculate, but I would think that by watching the stable coins too, because I've noticed movement in Tether that is directly correlated to movements in Bitcoin. When somebody's all of a sudden Tether is going up, the Bitcoin price is going down, and and vice versa. So I don't know if like looking at stable coins would also be something to be able to like kind of get a gauge on what's going to be happening in the market. I know that those two things happen almost in tandem, but I've noticed that being one of the things.
It could
Kinda
be
going
a
back to
leading
what-
or
Oh,
lagging
go ahead.
yeah, I was just going to say it could be leading or lagging, but stablecoin deep dive is definitely something, and really just the whole top 100 is something that we have to get done in Q1. So I think all of those are relevant theories.
Going back to the research portion about learning about who the team is and taking a look at the activity, the white paper, et cetera, on any digital asset, I think one of the things that we would be well placed or worth our while would be to take a look at what micro cap cryptocurrencies are in the marketplace that actually have a roadmap, a team, a white paper that would indicate to us that they have staying power and the ability to really explode during the next bull run. Because a lot of guys out there, a main part of the people who are in cryptocurrencies are speculators by nature, and they're looking for that little nugget of gold, that 5 cent, that micro cent, that 20 cent cryptocurrency.
Yeah, what I would call a sleeper that gives you a 5,000x
Right.
potential return. I would say the
so-
longevity there is partnerships and use cases. It's actual adoption more so than
Right.
it is the people. But I hear your point. All of those become longevity indicators that CoinGenius can quantify with a coin score.
Right, and I mean that would give people a real edge because for an average retail guy who's getting into cryptocurrency who might not have more than a few $1,000s to put in, I mean, sure, he'd love to own a Bitcoin, but he doesn't have enough, and he'd love to own some Litecoin, but even a few $1,000s doesn't buy you a whole lot. But if he knew that the research had been done on a micro cryptocurrency that has real ability to do something in the marketplace, that's a real value.
We have a resource for that now. Somebody who actually does that for specific coins. So if we gave them a few projects, they would dive pretty deep. It's not the cheapest thing in the world, but it's very exhaustive in terms of the analysis. So something we can look forward to in the coming quarter.
Value. Yep.
Prediction I'm going to make as it relates to this entire conversation and regimes and things being correlated versus not. I think there's going to be one more opportunity. There's a lot of people that are waiting for what they call alt season. A lot of people think alt season is not going to happen, that alt season is not a real thing. That was primarily driven by Ethereum, the ability for people to raise money via ETH, and that pumped all the rest of the cryptocurrencies out there, and all the other crap coins or shit coins as they call them, right? So I feel that what's probably going to happen is we probably have one more opportunity to where when Bitcoin slowly goes up, I think a lot of other ones, even the XRPs, are going to follow. But I think it's only going to happen one more time, and it's predicated really around this halving event because there's so much hype and speculation around it. If it actually does come to fruition and the price does move in accordance with what everybody thinks, I think a lot of these altcoins, not all of them, I think a lot of the ones that people have been holding on to for the last 2 years are going to pump significantly, but I think it'll be the last time it happens.
Yeah, I couldn't agree more. That's an excellent foresight.
Then after that, they're going to shit.
I would say one other thing that I've
So
been
Steve, go ahead.
paying attention to, and I wanted to just kind of jump in about the miners and the news about Bitmain laying off half of their staff ahead of the halving, and what's potentially going to come out of China as we get closer to the halving, and half of those Bitcoin are going to be available because one of the things in a YouTube video that I listened to this week was that the miners like essentially are the ones that are creating the new Bitcoin that's getting sold. The holders they're not selling their Bitcoin, so it's like when half of that is going to be available and at the same time only half of it is going to be rewarded, what's that going to do to the entire ecosystem of, in particular, Bitcoin?
That's a really good point, Sipto. I'm going to go in a different tangent and just finish my thought here. Is Steve and I had a conversation over the weekend, which was essentially, even the price bounce back, what I would call the rubber band bounce back from December and Wall Street going on vacation. And then you come back in the first, Monday, Tuesday of the new year, all of a sudden price is back to where I would expect it. He and I are both in agreement that 8,000, that mark, is not that exciting. If anything, we were seeing the artificial pressure before the end of the year, and now it's back where we would expect it. But he and I both agreed that we wouldn't really get excited until we see it cross, 10.5, 11, back in that range. And so I think that there are some mathematic calculus, machine learning parameters that we should build in now, saying, I want to see any coin that moves 10% in a 7-day period, right? I need to program those into the intelligence engine now. So I'm open to taking all of those suggestions, but looking at your all-time highs, all-time lows, RSIs, SMAs, looking at your parabolic lows, as Carl, reminds us, all of those things become important, and all of those things need to be in the intelligence engine and monitored on the regular basis so that we can factor them into algos into Q2. So if you have any suggestions of those pieces of data that's really important to you, that really tells you the story and the message, please pass that along as we're doing requirements gathering right now.
I would agree, but I would say something that's even more important that we need to start the beginning of the year with is defining CoinGenius, our methodology, right? Our methodology for ranking, categorization, right? Market cap, all these things are very highly controversial. And if you look at a lot of these different analytics providers and you look at the rankings, I mean, they're ridiculous. They have some things that are ranking that should not be ranking in the top 50. I know Steve's talked about this many times. I think it's really important that we really dive into this and define once and for all our methodology for what we think is fair, because that's what the world is going to hold us to moving forward. And it's going to be very important for all of our analytics and all of our ranking moving forward, and the algorithms based on the information that we put together and how we're basically, putting it together on our site. So I think that's a really important thing that we should probably have some breakout calls around and just really define what that looks like.
Jeremy?
Yes, sir.
Oh, my thoughts on that is market cap is market cap. Like, whatever, if Bitcoin trades $1,000 today, it's worth $1,000. If it trades $1 million, it's worth like that. That is what it is. So, are some projects?
It is, but it isn't. And Steve, the only reason I'm going to interrupt is I'm going to send you some research. This is a highly debated thing in the cryptocurrency industry. From Crypto Compare to CoinGecko. I mean, like, everybody has their different methodology, and we need to set ourselves apart by putting something together that actually makes sense. Because market cap, most people don't care. They don't think it's realistic, especially people coming in from Wall Street, because it's just not the same metrics that you apply to traditional equities, right? In cryptocurrency.
Well, hold on. Let me finish the point. So the market cap, like I'm just saying, like the market cap, the last trade, fake or not, it is what it is. Like no one can say that the last trade, that's being published on Bitcoin is 8055.02. Like that's what the last trade that. But hear me on the but part. What the added value is something like, well, what is S&P? Well, when I say S&P, people assume, oh, the S&P 500. No, but the S&P Standard & Poor's is actually a ratings agency. That's where their true value is, where a project could be worth $5 million and be ranked number 420, but if we were to rate them based on our metrics, all we've talked about, then that gives, to be the next CMC. CMC was the first. There is no next CMC. But what CoinGenius could be the first of is to be essentially the ratings agent. Like, hey, this coin is number 50, or this is number 201, which CoinMarketCap's trying to do with their number 201 to 270. Where it's like, oh wow, number 200 is 13 million, but 201 is 370 million. Well,
Beyond that,
something's wrong
Steve,
with that.
I'd like to do overlays where we rank them through different lenses. Meaning, if you put on the blue glasses, they're ranked number 50, but if you put on the red glasses, they're ranked number 4. There are different views that we need to correlate all of these. And to Jeremy's point, I'm going to concur. I think the biggest part is being transparent about how we're quantifying those rankings so that people can understand the different lenses and it becomes democratized data where everyone can look at it and infer what it means to them.
Yeah, but 100% agree with both of you, right? We need to have, that kind of goes in line with the customization, right? What do you care about? If I'm a hedge fund and I care about, these specific factors, that's how it's going to equate to giving a ranking versus a retail investor that might only care about news and sentiment. But to Steve's point, we'll have a quintessential CoinGenius score for each of these assets, and that'll be, as we said in the beginning, a conglomeration of all of our different coin scores, basically averaged and weighted depending on the importance that we all agree upon, and then that will be our actual CoinGenius ranking. But you should be able to toggle, to Christina's point, to look at the rankings in different tabs.
Yes, I agree, and that's, I guess, what I was trying to say. Where ranking on market cap is one thing, but then S&P also has a bond rating. What level do they think they're rated to give them money? Where do they rank among their peers that a debt investor would? And essentially, that will be one of the. If we can be the first at that, that will be. That's going to be like the pot of gold, because when I know people are going to think I'm crazy on this, but when I hear the term use case, Bitcoin and maybe Litecoin, those are going to be the things that you're going to be able to put on your phone and go buy a car or whatever. Maybe some other people will take Ethereum or EOS or whatever. But the use case building, if we build CoinGenius and said, okay, well, we're building CoinGenius Coin 2, the only method of payment you can pay with is CoinGenius Coin. It's like that. The use case is one thing. It would be a rarity that someone would down the road would go buy their groceries with CoinGenius Coin. Maybe they do, maybe they don't. But I feel that term. The use case of crypto is it's the third method of raising capital. I know years down the road when everyone agrees, you're like, damn, that guy Steve actually. But that's really what it is. Look at Ripple. I mean, what Samson said. What are they doing? They're raising money using blockchain, and that I think is what many don't want to say. Where aren't going to be hundreds of coins that are accepted at restaurants, and maybe they do, maybe they don't, but they're one-off, like, on crypto casino, you can use 20 different coins. Okay, fine. So what do they
Steve,
do?
I'm telling you, from the restaurant industry, they don't want to spend $1 unless they see ROI on it. We didn't even want to upgrade like the ability to insert the credit card chips, and that's a standard way of paying for it. There's going to be massive amounts of analysis that goes into it before a Fortune 500 is going to accept something like that. So I think your car dealerships are a really good leading indicator. I think restaurant adoption, what I call buy a burger with Bitcoin or Litecoin or any of those, fiduciary coins, that adoption, because it requires infrastructure and investment, I think that's going to happen later. And I think those are also things we can forecast.
Well, here I'll ask a general question to everyone on the phone. We can all see what the price of gold is on the COMEX, right? It's $1,590. Yes, give or take. So if everyone loaned me $1,590 in cash, somebody sent PayPal, somebody wrote me a check, somebody brought me cash, and I said, hey guys, I'm going to pay you back with a gold coin tomorrow. You guys may or may not accept that, but I have to at least ask. And those that do, it's like, okay, we know why. So, but most, like you said, if I go into a restaurant and I order a steak and this, and it's $1,500, which it wouldn't be, and I show up with a gold coin, they're not going to accept that. They're going to be like, what is that? So
because there has
that's
to be
the whole
infrastructure to use it. Yeah. Okay. Sorry for interrupting, but yes, the infrastructure build is the hardest part.
And therein lies what most still, are not understanding. Like there's so many projects. Like I follow masternode projects quite a bit. Like there's ones that host and there's ones that are building decentralized exchanges, and they do both. And it's like, oh, you can pay your fees in this. That's basically a line of, it's almost like a line of credit. Like I have a Best Buy credit card because they gave me a $50 gift certificate if I signed up for it. But if I walk into a car dealership or I walk into a hotel in Las Vegas with my Best Buy card, they're gonna be like, yeah, I don't accept that. So is the Best Buy card a use case? Oh yeah, you can use it at Best Buy, but that's about it for most of these. They're going to end up building businesses.
I would look at it. Yeah, I would look at it as use case and like infrastructure, mass adoption, quantification.
Yes, agree. But I think, Christina and Jeremy, I think you just made a point where it should be one of those, what are they called, CBRs or the
CPRs, the tickets?
Yes, the CP.
You know what, Steve? You don't even need a ticket. You can write a document and I'll create a ticket for it. So if it inspires you, please write it up.
The ratings agency part is something that costs little capital. And we don't need to spend a lot doing that. We have intelligent people right now. Like that's something. You want the monetizable thing? I didn't think about it until you guys mentioned it. But what does it take? I mean, we're a ratings agency. Why? Because we can. No one's done it. What's the rule? Well, this is just our opinion. We're giving an opinion, but people start to respect that opinion. All of a sudden, then I don't know.
Yep, I concur. Go ahead and write a document up and I will take care of the paperwork.
Okay. Hey, I have to run though. So I will circle back with you guys on Friday.
Sounds like a plan.
Okay. All right. Bye, everyone.
Thanks, Steve.
Yeah.
All right, folks, before we wrap up our Genius Wednesdays, does anyone have any last comments? Okay, very good. I'm going to take that as a no. Thanks, everyone.